Company got a price target upgrade from B of A to $444 a share after posting better than expected results for the fiscal third quarter. FedEx also raising its fiscal 2026 revenue guidance. Take a look at the stock right now. It is higher by 0.87%. But now shipping in the Middle East, that still remains the big concern here for government officials and investors. Bank of America's head of commodities and derivatives research is now warning if oil does not continue to flow through the Strait of Hormuz in a matter of days, the risk of a global recession will be jumping higher. Let's get to our floor show. Joining me now is BKTraders.com founder Boris Schlossberg and Slatestone Wealth Chief Equity Strategist Erin Gibbs. It's great to have both of you here. And Boris, I want to start with you because, you know, one of the things that you point out in your research is that this is not fundamental. This is psychological. We had a Dan Brulette, who was the energy secretary under Trump in this first term this morning. He goes, look, this is trading activity. This is market activity that we're seeing in the oil contract. This is what is driving prices higher. The United States is a net exporter of oil.
Correct.
We only import 20%.
Correct.
And yet look at WTI right now.
Fundamentally, we came into the year 2 million barrels oversupplied on a regular basis. And everybody was projecting basically 55, 60 oil as a steady market. All of this, of course, is a function of all of these geopolitical events. And if they can just release the pressure, you're going to see, I think, oil collapse very, very quickly and hopefully release this fear premium. I understand that a lot of damage has been done, and it's not going to be instant, and it's not going to be immediate flow of oil. But I think the psychological impact will be so enormous that we will be able to get back to more or less regular activity as quickly as possible. And, of course, you know, there's a lot of stocks I think that will help move that along.
We're going to get to those in a second.
We'll get it along.
Yeah.
But generally, I mean, it feels like a very consequential weekend, right? It really feels like this next week, it's either going to be do or die type of situation in terms of how this conflict develops.
You're talking oil services. You're talking about SLB, Baker Hughes.
Yes.
You like Talon Energy. That's the AI power demand story. But obviously, you're looking at oil services.
Right. And oil services companies are going to benefit from it. But what I'm saying is just from a geopolitical point of view, it seems like this seems to be the weekend where things really happen. I mean, if we do come in and if we do take over Carg Island, I think that will be the whole thing is who's going to blink first. If the Iranian regime finally blinks, all of this fear premium is going to very, very quickly dissipate. If we're in for a long slog, then yes, you know, the bears really have their case.
Well, no, Erin, actually, Citi came out, analysts at Citi, and said, look, if this is a 4 to 6 week story here, 4 to 6 weeks, you're going to have oil back down to $70, $80 a barrel. I think that that's something that we really need to point out here. But then you have the Saudis coming out this morning and saying that they believe that if it is more of a prolonged process, maybe this goes into April, you're going to see oil at 180. Benefits the Saudis, sure. The other side of this is the gasoline trade, because Qatar is a net exporter of liquefied natural gas. Maybe that doesn't hurt the American market as much as it does the European market, but that still would push those prices higher. Erin?
Oh, yes. Sorry. Yes, absolutely.
Long-winded question. My apologies.
No apology. So I think and the interesting thing, I think, when we're pulling it back to how the markets are reacting is that we see that it's probably going to be much harder for European consumers and a much bigger, effective inflation and, sort of a tax on European customers and not so much on U.S. if this can be resolved in, 6 to 8 weeks. And so I think the amount that the U.S. markets have been hit, and they have been quite dramatic, I think that's a real opportunity for rebounding. And so I think we are getting close to being oversold in certain areas and certain names. And you had mentioned, I had actually suggested Talon Energy as one of those stocks that's an energy play that's getting beaten up, that is all about selling wholesale power to, AI producers, for example, for Amazon. And so I think there are actually opportunities with the assumption that this is going to be short term, that this won't be years long, and that we're going to see this be resolved within a couple months.
Mm-hmm. Yeah, and thank you for correcting me. Talon Energy is one of your picks. And again, that's the AI story. Halliburton over here for you. But I want to talk about the global economy, because there's a lot of concern now that the risk of a recession is rising, 30% by some estimates, depending on what happens with this conflict. And look, the PPI report that we got last week, it was hot.
Not pretty.
Inflation is back on the table here. There is concern about inflation. Right. What do you say? If the Fed didn't really give us a lot of commentary on it this week, unfortunately, but other central banks have, and they're putting up the red lights and saying, we are ready to raise rates if we have to. We're ready to hike if we have to.
Yes, and that is definitely, a concern, and I think, we have to be very, very mindful of it. But again, it all can just flip very, very quickly within 2 or 3 weeks because everything rests on what happens in the Middle East at this point. So very, very hard to project whether it's going to be. None of this stuff is truly structural. It's all essentially geopolitical, Now, stepping away from this, I actually think one interesting thing from this whole geopolitical thing is that it's fascinating how the Trump administration is completely reordering the map of the world at this point. If you think about this, if they succeed, what's going to happen is we're going to be tremendous allies with the Middle East and the Gulf Coast countries. If we can get Iran to sort of stabilize, it's going to come on board, and we're going to have an enormous, enormous presence in that part of the region, with India being the labor supply, Israel being the research and development, Gulf producing energy, and Europe pretty much on the wayside.
I agree with you 100%. It is incredible what the administration has done here.
Yeah.
First we had Venezuela, we're talking about Cuba. It really is amazing that they can, this whole of government approach that they've used. But real quick, Erin, I do want to get your final thoughts on this because, and I'm glad that he brought that up, that Boris said that, we're looking at a new world order depending on where this goes. But, again, this administration is laser focused on reshaping the Middle East, and a safer Middle East is an economic engine for the world.
Absolutely. And that brings more stability and reduces some of the fears that we're seeing in the market. So, I talked about how the past few weeks where we've seen the market going down, it's this rotation of going between what the Middle East is, what's going on in the Middle East, private credit, being that, the cockroaches and so on, and then this increased recession risk, which is also obviously tied to the Middle East. If that can be contained and we have this new world order where we're seeing more stability and the rise of globalization, which in recent years we've seen a decrease, that ultimately sets us up for continued dominance and continued growth and GDP growth. And so I think that could be a real benefit. And it's, again, just getting these fears out of the way so that we can refocus on the fundamentals, because fundamentally we're still seeing very good outlooks and profitability for the next year. And so I think the market could sharply rebound. And we know that when the market rebounds, it likes to rebound fast.
Exactly.
So be ready.
And you want to be positioned for that. I think that's the message to our viewers today. You want to be positioned for what could be a very, very fast turnaround because everything is so news-driven right now. Boris Schlossberg, Erin Gibbs, guys, thanks so much for being with me. A lot of news covered. Appreciate it.